Ooh, that's hot. Hey, welcome to the Closing Beat, everybody. Happy Monday. How you doing out there? All is good? Hope you had a good weekend. With the time change and all, you got a chance to, well, before, but now it's the first weekend where you're like, oh my God, it's getting dark and stuff. I hear that we're not actually doing time changes coming up here soon, so that ought to be interesting. I don't know what's going on with that. Hey, before we get started, a quick thank you to all of our clients who dealt with me during the Source of Wealth request. Needless to say, your old boy's hitting the trace a little bit early here today because boy, what a day it's been trying to keep up with all this new regulations for brokerage accounts and in retirement accounts, and we just had to get it done. So you want to actually see how stressful everybody was today? I left for a minute, and they all just started drinking without me. They went to Doug's office and just went to town on it. So they're working hard over there, and appreciate all your patience there. Not something I would have handled that way, but nonetheless, we have to deal with that. So happy to help with any questions that you have, of course. I had to do it too, right? So it was something I had to go through, and we made it as easy as possible, but probably could have done better there. I will admit that one as well. As far as the markets, which the most of you are here to hear about, right? We're going to teach you some stuff today. We're going to talk about things that are, what we call actionable, right? Things that you can use and take with you here instead of someone having an opinion and being like, you should buy the market, sell the market, whatever. We want some data, right? So let's take a look. Last week we saw a pop here in the S&P. It wasn't the best week of the year, believe it or not. It seemed like it. It really felt like it. But it was the fourth best week of the year, coming off of the Thursday and Friday rally after getting the inflation numbers there. We had a 7-week streak of ending a week on a 1% gain or more, right? Did you know that? For the last 7 weeks, the market has ended the week, whether it was on a Friday or not, with a 1% gain or more, and we broke that streak. We were close, 0.9% on the S&P, so it almost got there on the Friday, but not quite enough, and kind of understandable given what happened there. I do want to point out real quick, if you are one of our clients or a research member, you can hop on into the Notes from Jazz section in your portal there. We talked about a handful of things. I was talking about this double-digit rally, which I literally showed was going to happen, and we went through all the previous examples and things. But I also just want to point out, we've got your 2023 numbers in there. Your cheat sheet for 2023, you can download it, have at it. A lot of cool things in there to have throughout the year of 2023, and a sheet that I'll be referencing with you as you have questions regarding your dough there. So back to the markets. We have supposedly inflation peaking, and that's what you have, unless you were under a rock, right? You see now, inflation supposedly peaking, everything is good there. I'll tell you though, looking through these stats, historically, when inflation gets over 8%, I'm talking about regular inflation, not just the core inflation there. When it gets over 8%, 80% of the time it moves higher. So we're either really lucky, or the Fed's really good at what they're doing, or there may be more to come, right? Because we don't normally just bust over 8% and then come right back down. It takes time, right? So if you're rushing to buy something because the price went down a little bit, what's the hurry? You know what I mean? Hang out, see what happens for a little bit. Anyways, the fourth quarter here for the S&P is on track to be the 11th quarter in the past 10 years where the big guy stocks, and there's 4 in particular. You got Amazon, Microsoft, Apple, and Alphabet, where they have collectively, as a group, imagine taking Apple, Amazon, Microsoft, and Alphabet, putting them in a portfolio and saying 25% in each, nice equal weighted portfolio. As a group, they have underperformed the S&P. It's the 11th time in history that that's happened there. And I'll say that going forward, it's been good news for the S&P. You would think that would be bad. Now, keep in mind, I should probably have made a visual for you. those four stocks did not always have the weighting in the S&P that they did. Like Apple went from 2% to 5%, right? You got a bigger chunk now, so they have more say this go around. But before, they typically, when they underperform the stock market, meaning if you only own those four stocks, the stock market would be beating you. Typically, that led to better returns there for the market. I do want to point out something real quick. If you don't like the small caps, you may want to start learning over there. This is your actionable item here. We're going to try to talk about this, and also leads to the title of today's show. My shoe just fell off. Is what is the big investors buying? And I'm not kidding. It just fell off. I put it back on. Looking at last Thursday's rally, you could look at technicals, right? We're looking at the Russell 2000 here. You could look at it and say, okay, I'll be one of those kids on TikTok. It broke the 200-day moving average, and it's trending higher in the short term, and the 20 is going to cross over the 200. I've seen it all. I know it all in regards to that. Yeah, that's fine. That's a perfect little bit of analysis. But where's the money going? Like, how do we look at the big dollars there? I want to share something with you here. Last week, if we break the entire market into 10 chunks. You've seen me do this before. Fancy word is called deciles, but otherwise you take the entire stock market, not just the S&P, and you say, okay, I want to break them into 10 chunks by market cap. I put size here, but it's by market cap. And it's the smaller market caps in the first chunk, then the next largest, then the next and next, all the way to the largest market cap stocks. Do you see a trend there? If you had to go from low to high in terms of the value of a company, not the price, but the value, it's market cap, right? It's total value, the shares times the price, right? If you had to do that, you would notice very quickly, everyone seems to be interested in the small cap stocks, or smaller, right? You've got the biggest gains in one day coming from, this isn't today, this is Thursday, by the way. Biggest gains coming from the smallest stocks. That's interesting. The second biggest. The biggest gains coming from roughly the smallest stocks. How about that? The biggest, most popular names with the largest market caps that you definitely know their names did okay, but they performed in line with the market. We gained 5.3 something percent. So did they. But the outperformance is coming over here. In other words, people figured that out and shifted money towards these small caps. So if you go back and look at the Russell, well, no wonder it's starting to wake up. So add that to the technical analysis you want to use. Remember, we don't look at charts and make decisions just on the charts. The charts tell you when you may want to buy, but the information you can gather fundamentally, price, market cap weighting, PE ratios, things like that. The things that you can gather fundamentally might tell you why you're interested. So we clearly have people interested in buying over in that small cap space. Now, when do you want to participate, or if you do? We have a small cap fund here at Jazz Wealth. It is going swimmingly, so I'm very happy with that. But I just wanted to talk about that. And then while I was at it, I'm like, let's try other stuff. Like, is there any other clear area where market moves? In other words, if we go back over here for a second, if I were to show you this, the performance of all stocks based on their size, and you saw up, down, up, down, up, down, up, down, down, up, down, right? There's no pattern there. There's no fluid movement of money. If we go over to something like short interest, very popular, since the Wall Street bet days, right? People want to know, tell me about the short interest. I want to buy stocks that have a high short interest. Well, that trend is still continuing, and we can see it here. Here is the entire stock market broken into 10 portfolios and ranked in performance on Thursday by their level of short interest. In other words, down here, very low short interest on the grouping of stocks, about 200 to 300 of them in there, all the way to the highest, most shorted stocks in the market had the best performance. So you can't argue with where'd the money go? Where's the big investors going? Where's the where's the populace going, right? They're going to small cap stocks that are highly shorted. Very simple, right? So do you expect that pattern to continue? If that seems like something that, it makes sense. People are going over there, a lot of value over there, a lot of cheaper stocks with smaller market caps that are more volatile, maybe a little more growth for my buck there, right? Also, we add the kicker of being highly shorted. So if it does pop, we do get that short covering boost, maybe not as much as we've seen back in the day, but you get a little boost in there. So people have clearly made up their mind. That's the actionable decision there. I can't tell you like to go buy the stock and that's all good, but I can show you data all day long. And if that data points you in the right direction, I won't say I've done my job, but I've done something, right? Okay, moving on. Sorry, got on a tangent there. Okay, I want to take a look here real quick at semis. Well, let me do this real quick. So we go with the Dow, wild day, positive, negative, positive, negative. On a typical summer day in 2019, we would have been like, holy cow, did you see the stock market today? Wild. But in 2022, with everything we've been through, look how tiny that day is. It's nothing. We can handle 100-point moves over the course of 15 minutes. Sure, no big deal. That would typically be a pretty volatile day. Nonetheless, the Dow finished down on the day. NASDAQ did finish down. Do you mind a little bit, though? Like it expended so much energy here, was getting things going, and just, a little pullback there. That's okay. Let it pull back. But one place that I do want to point out here, have you noticed the semis, right? If you're looking for a basket, a shopping list, something to focus your attention on for a little bit, maybe you look at the semis here. You will not be the first to figure this out, but check this out. So semiconductors had an incredible move, breaking through the downtrend. This year's downtrend actually there. But I want to show you something here. Look at the 5-day performance of these stocks here. Just quick scan. There's nothing fancy about this. I'll just expand it so you can see here a little bit better. Seems like it's, yeah, there you go, right? This is just the last 5 days, not including today. This is the 5 days through last week. ASML, 27% in 5 days. Do you think people are interested in that stock? Huh? 24%. If you just caught Microchip and said, I think I'm interested. It had a big move. I'd like to buy it on a pullback. Would you be saying that one stock has some unique characteristic about why it went up? Or would you say it's part of the group? Think about that. How often do you find a stock and you're like, got me a good one, right? Here it is. Well, is it that the stock is good or is money moving into that industry, sub-industry, sector, whatever it may be? How can you tell? How do you know, right? Well, you can tell by looking at everything else. The semiconductor industry, it's not a sector, industry had a big move, right? We come over here and go, what's this? What's happening? This is why we always do top-down analysis. Did this happen because Taiwan Semiconductors had a good day? Because that's the biggest position in this ETF. Did it have a good day and that's what caused it? I don't know. Let me go check. When you go look over here, sure, it had a good day. 17.5%, well, it had a good 5 days. 17.5%. But is it on its own? No. For whatever reason, money is going towards the semiconductors. Now, we could take that decile analysis. We wouldn't have to do a decile analysis, but we could take it further and say, is money more going to these stocks because of some inventory issue, cash flow issue? I wouldn't say dividend, but on a different grouping of stocks, you could say dividend. Is it a buyback, right? You could apply all kinds of metrics. So in this case, semiconductors as a whole are enjoying a good rally. Those that have been left in the dust already and have underperformed, not doing as well. Those that have outperformed the weakest, I can just tell by looking at this name of this list of symbols, they're doing better. So that's probably a metric there. People say, I want to buy the relatively strong stocks in the semiconductor industry in an otherwise down move, meaning they didn't fall as much. So I'm giving you the fancy answer, and I'm giving you that as well. Have I gone too much for you? Can you take a little more? Is that all you got, Phoenix? Midterms. Actually, I wasn't asking. It was rhetorical. I'm going to talk anyways. The midterm elections there, wrapping up the votes. Did you know that, so far, the way it's looking is we have a Democratic president, of course, a Democratic Senate, and a Republican House. I guess things could change, but right now, that's pretty much how it's ending up there. Do you know that this has only happened one other time in history? I would never have guessed that. So I did a little research. A Democratic president and a Democratic Senate with a Republican House. Once, one other time, 2010 actually, wasn't that long ago. During that time period, the market did okay. A lot of times I forget. No, a lot of times the Republicans get blamed for market performance, Democrats they boast the better performance by president, right? But by Congress, is there anything there? Well, if we look through it there, over the next 3 months, the markets gained 9.3%. The last time we had presumably what will be Congress as a whole this time. Over the next 6 months, 3.7%. No, I'm sorry. Over the next 6 months, 14%. And over the next year, only 3.7%. So there was a pullback inside of there is what's telling you. We had a ramp up. We had a pullback during that. Other than that, it's one data point. You know, you can't use one data point to make a decision. Just kind of fun to look at. You know, going to do it anyways. Here we go. Charts. Did you see the dollar? I think I was most excited about this today through all of the headache that we've been dealing with all day and making things smooth and right and everything. I think I've been most excited about the dollar. Does anyone want to guess why I would be excited about the dollar getting weaker? This is nothing like tricky. It has nothing to do with gold or anything else. Just what? You want to take a guess? Bet somebody something? Bottle of Buffalo Trace or something, huh? It went from being stubborn to a sharp pullback. See that there? I mean, I don't have to pull it out. Remember we kept talking about this? Like, oh my God, all through earnings season. That's your hint. The dollar refused to pull back. Why is it such a cool thing that the dollar is pulling back right there? I will point out that this, over the last 50 years, this is the 4th largest pullback in the dollar. So this is meaningful, right? It's not just, you know, colors on a screen. This is the 4th largest drop in the dollar in 50 years. That will get more attention if this holds itself down here. And by the way, in every one of those other cases, the dollar stayed down. It did not bounce and recover to highs. It actually stayed down over the course of the next year. So fun fact there that I wrote down last night, and I forgot that I wrote that down actually. So why is it so interesting? Yes, the drinking game. Chop's got it, right? Forex headwinds. That's the geeky thing that they all said during earnings season. Remember we talked about this. The dollar is strong, and there were so many companies, remember the names of them? There were so many companies that said, we are dramatically lowering our guidance. We will not perform as well as Wall Street has asked us to perform and how we should perform because of the conversion, the currency conversion. So we were talking about this. Therefore, if the dollar fell, that meant that what'd they do? That means they overshot their weakness. That means that all of a sudden that Forex headwind is now a tailwind, right? If you want to stay fancy. Think about that. If this stays low throughout the quarter, what's going to happen? Companies lowered the bar here, but through no fault of their own, the currency just falling and the other currency rising. Whoa, now we're here. You got a recipe for some beats next quarter. So that's what you look up at the moment. You build your list of everybody. You want to find the people that reduce their total next quarter expectations or even full year guidance by the most and so that's one criteria. And then the second is that also they have the majority of their sales coming from overseas. You don't have to know like the Forex conversions and all that. Just who's selling more stuff overseas than in the US? That's my list. Okay, of that list, who brought their guidance down? That goes on a watch list for sure, especially if the dollar stays down here. Now, if it doesn't, you just get rid of the list, right? But that's the kind of thing that people look for. I get excited about that. Anyways, I've been rambling. Let's talk here. Home builders. What a weird relative strength here for the home builders there. 15 of the 19 home builders are now considered extremely overbought. Yeah, I mean, that's a relative term, but you got Dr. Horton, extremely overbought. Pulled back a little bit today for you. Lennar Homes, extremely overbought, meaning it does not normally find itself so extended from the 20-period moving average. That'd be the green line on the charts if you want to pay attention to that. If not, no big deal. Pulte Homes, I'm not going to go through them all. Meritage Homes, KB Homes, Toll Brothers, they're all extremely overbought. What's happening? Housing prices are going down. People are slowing down. Supposedly it's supposed to be a big deal. Realize the home building ETF, which includes Home Depot and stuff too, right? So I'm exaggerating a little. But the home building ETF, the XHB, has outperformed the stock market this year. What's that all about? That's a weird situation to be in. Anyways, stocks in the news. Stocks in the news. Bumble. Actually, it didn't finish positive on the day, did it now? Do you guys use Bumble there? Barron's was talking positively about Bumble. They were saying that the stock has about 30% upside in it over the next year because market share. They're gaining market share. It's kind of that friendly place you can go to meet people and socialize or whatever. Never been on it. Disney in the news there. The company they're going to stop hiring people, and now they're starting to look at cutting jobs there. Your Disney tip of the day is don't go to Disney right now. Don't bother. The rest of the year, you're done, right? You can actually see what do they call them? Ticket holders, people walking through Disney. You can actually see the crowds. Holy cow. Typically, a busy time of year, the tip of the day, don't bother. Do something else right now. Wait till the new year. You'll be just fine. It'll still be there. JP Morgan, they said, hey, we didn't actually do a lot of leveraged loans to the likes of Nielsen or Twitter is a great example there. And therefore, we're not paying too much of the price right now like our competitors. Didn't really matter. Stock's very extended in the short term, so that's it. Tyson, earnings came out, and I think they are grateful. They're trying to take the focus away from their CFO passing out on somebody else's couch because he was too drunk. That's a true story. Should he be fired, by the way? Are you over there? Can I hear you? No? You wanna, can I ask you a question?
Yeah.
So if you're the CFO of Tyson Foods, the chicken people, right? And beef and pork and stuff, and you go out one night, have a little too much to drink, and instead of driving home, you pass out on a complete stranger's couch. Not a buddy, a complete stranger. Do you think ultimately you should be fired for that, or just go back to work and shake it off?
Well, he didn't drive, right?
He made it. Yeah, he didn't drive. He just found a couch and he went to sleep.
I likes to have a good time.
I mean, who hasn't been there, right? So I don't know if they're asking for him to be fired or not, but I just thought about that. I'm like, somebody's going to get mad, want him to get fired. He didn't drive. He just found the first couch he could find and, he did his thing. Anyways, so the stock was down on the day. Hey, pork and premium beef are seeing weaknesses there. If you dig through their earnings, you can skip most of it. You go right to that. That's where they're seeing the weakness there. People do that, right? If the economy's slowing down or you threaten the idea of the economy slowing down, people will spend less money, and they are. Speaking of spending less money, Party City, man, just hanging on for dear life here. It's a tough one for them. Kind of a cool place. I like to get my silly string from them, but it's what it is. They got downgraded by, I don't think it was Moody's. I want to say Fitch if I could find it. Anyways, they got downgraded to basically junk status, CCC status there. I'll tell you this, those of you looking for a lottery ticket, this is genuinely a lottery ticket. They are riddled with junk bonds right now. If you'd like to make 8.75%, you can buy their junk bonds for pennies on the dollar right now. There is a high probability that you will lose all your money. But if they don't, you make 8.75% yield, plus you may have bought a bond literally for pennies on the dollar, which could be worth $1 in the future or even more. So I'm not telling you to buy that by any means. I'm joking about that, but wow, that's a tough one there. That's a tough one. Hope they make it. Hey, your keep your dough straight tip of the day. Make sure a Roth IRA is good for you. I keep coming across this. We put money into a Roth IRA because we want to avoid the tax. But the end goal is to avoid the total tax. Whether you pay the tax today, you pay it tomorrow, you're paying some kind of a tax. We want to pay the least amount of tax possible. So that may mean that a Roth is not good for you right now. You will ultimately pay the total tax, the least total tax, but it may involve your 401k now, your IRA now, then come back to the Roth IRA. So really consider that. Just run those numbers and figure it out. I'll do a video or something where I make a spreadsheet or something just to kind of, show you the difference there. But the Roth is not the default, right? All right, I'll try to take your questions if you have any. I don't know. Rambled a little bit today. Sorry. Just going on about my day. We'll let the questions pop up here, see if I can help you there. Well, there's a lot of lottery tickets out there, right? The CFO does have some paternal connections to the CEO, but what do you think? Should he be fired? He should be promoted? Yeah. I don't know. It's like if they liked the guy and he was doing a good job, then they'll rally around him. But if they were looking to kick that person out for somebody different or an activist investor or something, that's all they need. They would get him kicked out. He probably knows that too, but oh man. I think he kind of should be punished to some degree, but yeah. Yeah. You think the PR manager should be fired for not containing this? Well, yeah, I don't know how you find out. Like, who's tracking the CFO of Tyson to find out that he was arrested for sleeping on a couch? Like, the news knows too much. Yeah. Where do you decide the Roth? That's the tough part, right? Because I'm not doing it based on that. It's so difficult to make a singular decision apply to everybody, Doc. I wish I could. That's why I was thinking over the weekend, I started tinkering with a spreadsheet. I'm like, I'll just make a spreadsheet. We'll punch in numbers. And then for each person, we'll figure it out if I do a video and they have questions, because there's too much there. Like you can't say, oh no, use the IRA, because I don't know if you have a 401k, which means if you have the right income, you're ineligible for IRA pre-tax contributions. I don't know. I don't know your filing status. You may not even be eligible for a Roth if you're filing separately. So there's a lot there, which is why that you don't see one good video that says, if this, and this, use Roth. If not, use something else. So I wish I could. I think his wife punished him. She's like, he went from couch to couch, right? Oh, man. I saw the video you put of the SPY-G is dividend is same like SPY. Oh, I'm not sure the question there. So that's a dividend-based ETF. So that's like a monthly income type ETF that you would participate in if you were more interested in steady dividend rather than upside growth. You're giving up the upside in exchange for the dividend. That's how those work. The Chef, that's a cool name. Do you provide consultation for non-managed customers happy with my current plan and not looking at long-term management interested in? We can't. Yeah, it's not that we don't want to. We can't. We're registered with the SEC, so we decided to go for broke and go as big as possible regarding the types of regulations you have to follow, not the size of our company. And so we're not allowed to. We're only allowed to give advice. The ruling is we can only give advice specifically to clients that we know their situation. And we can't charge like a planning fee or something. Sorry. I do get that question a lot, and I wish I had a nice answer for it. I guess we could start a separate company and do that, but that's, we got a lot on our plates at the moment. Is there a cheaper version for the Qs? Well, the Qs are pretty, I mean, that's pretty fair right there. So, well, it's a smaller index. So could you theoretically just build the index if you had access to fractional shares? Could you not just mimic it and do it for free? I don't know why people haven't figured that out yet. We do that here. So like all of our portfolios, they're not ETFs because we don't have to buy them. We can build our own ETF and then eliminate the fee. So yeah, from couch to the doghouse, man. Oh, man. But I'm sure there is a cheaper version of the Qs. Just don't fall for the leveraged ones. Leveraged ETFs are not for overnight trading. They tell you that. I get that question a lot too. Go look up any leveraged ETF. Just flip to like page 2 or 3, right around the table of contents. And in bold at the bottom, it says, this product is not suitable for overnight or long-term investing. But people do it. If you were to do it all over again, you'd gone heavy in the Roth. Yeah, that's, of course, we all would have started earlier though, right? I mean, that's the tough one there. Missy's got a question. I can find that because your little icon's in blue. That should be easy. Hey, Dustin, can you tell us where the regulation is coming from to disclose our source of and amount of income? You have that info in Nest Egg, right? No, we don't. Well, no, we don't have that in Nest Egg. So we wouldn't have previously collected information like, are you an entrepreneur? Do you, I mean, I know a lot of you, right? So I get it. Do you have an inheritance, right? I could guess some of you, but I wouldn't be able to do that for all of you. It's called source of wealth. And ever since the last election, that's the law that advisors and broker-dealers and stuff have been trying to fight, where we just claim that we should be asking the client for that as a part of planning, right? And we were willing to. So our argument back to the SEC was, we'll ask the client for that information, but only as it pertains to planning. Otherwise, we don't care. We don't need to know how this works. And Missy, I'll add one more thing there. The saddest part about the law is you have to provide the information, but no one checks or verifies or cares if it's accurate. There's not even a check on it. It's literally just goes into a box and it's just gonna sit there and collect dust. There's nothing. There might be something in the future. I don't know. There's nothing on the table. But nobody cares. You could put that you watch babies for a living, and in reality, you sell tires. I don't know. Nobody's going to look. That's why we were all like, why rush this? This is the stupidest thing ever. Anyways, I'm not going to ramble to you guys there. What is the Q? But the QM is, that's going to be leveraged, I believe. Robert says money managers can't even use the inverse. Oh, we can. Yeah, we definitely can. There's not a chance that I ever will. No, I wouldn't even consider it because it doesn't make sense. Like if you wanted to be leveraged twice, we would just buy a little more, right? We would just bump up the allocation in the positions inside of whatever you're trying to replicate. So that's like, it's a funny product, but people fall for it. All right, a couple more questions here. Dang says, man, Roth, question. I'm allowed to withdraw my principal, but is it all in? But it's all in index ETFs. Am I supposed to just sell to set an amount of shares or sell by what I put in? Well, okay, so if yes, you can withdraw your contributions, but if those contributions are currently invested in something, you do have to sell off part of those investments or all of them or however much you're trying to raise to get the money out. Absolutely. That'd be like if you invested in a truck, but then you change your mind, you needed that money, you have to sell the truck, right? So you'd hopefully have owned numerous trucks that you could sell. Yep. The big argument, index versus active. Somebody arguing that one there? I'm not saying index versus active. I'm saying ETF versus your own ETF. Like you could do the same thing. You realize they're all just vehicles that move at a certain speed. If you want to move at a certain speed, you could pick a completely different grouping of products, stocks, not bonds, but pick up anything else and build something that moves at the same speed as this, right? There's no magic. Well, there's a little skill to it, but there's no magic that says, I want to move as fast as X, but I don't want to use X. I want to build something else. Well, put enough things in that basket to try to figure that out. It can be done. That's how one ETF is different from the other. That's all it is. They just decided this ETF, we're going to try to replicate this performance. You ever notice, by the way, it's the last thing, small cap index ETFs, they don't own the small cap index. They are sampling. That's their fancy word. They call it sampling because they can't actually buy every stock in the small cap index. It would cause them to get in trouble. They would move the price of stocks just by buying more for their index. So they do what's called sampling. Well, if you can match the performance of an index by sampling your own products that are in that index and still match the performance and sometimes beat it, well, how? So it is possible, right? It happens every day. It's a fun one. The QM, well, any lever. Yeah, I could do that. Yeah. I love it. Okay, I'm going to wrap it up there. Got to get back to it, man. You guys enjoy the rest of your day. We'll be back tomorrow. And adios. Thanks for watching and hanging out with us. See ya.